You're listening to the Practical Wealth Show with Curtis May.
All right, hey, welcome to another fantastic episode of the Practical Wealth Show. And I'm your host, Curtis May. Today, we're going to talk about, this is for you real estate investors, would-be real estate investors, how to find funding for your deals without asking for it. Okay. Or another way to say how to raise private money without asking for money. All right. How about that? And so I have an expert for you today, and I'm going to read a little bit of his bio. So, because Jay's been in the game a minute. So Jay Conner began investing in real estate in 2003. At the start of his career, he was a local banker. He was able to fund deals, was able to put together a few deals, but it meant coming down with large down payments. Okay. And after years of feeling owned by the bank, how many of y'all feel that way? Jay learned how to buy properties using creative financing, including buying subject to existing notes, using lease options and seller financing. And so he has courses in a book on all that stuff. So we're not going to go into that today. We're going to stick to this topic, but I want you to know he's the man. So, and then what happened was after the market crashed, he, as a consequence of he learned that the world of private money, we're going to talk about today, and he's developed his own system for securing millions of dollars in funding for real estate deals. Okay. And Jay has refined his private money system until it's repeatable and dependable. And when he put his system to test, the first private lender gave him $250,000, $250,000. So then in less than 90 days, Jay raised $2.1 million in private money. And as a result of losing his line of credit, one door closes, another door opens. Necessity is the mother of invention, right? And entrepreneurs solve problems. Jay Conner, welcome to the Practical Wealth Show.
Thank you so much, Curtis. I'm excited to be here with you. And from what I know about your show, you got an amazing audience that tunes in. So I'm excited to be here to talk about my favorite topic with you, and that is private money.
So let's talk about private money. So tell them, just for people that may not know, what is private money?
Yeah. So simply put, a private lender is an individual, a human being like you and me and you that are listening to us. It's an individual that loans money to a real estate investor for their deals, either from their investment capital or, and this is a big one, or from their retirement funds to us real estate investors. And so we're not talking hard money lenders. We're not talking institutional money. We're not talking about mortgage brokers. We're not talking about borrowing money from people that are in the business of loaning money. We're talking about borrowing money from individuals that want to be involved in real estate, but they want to be totally passive. They don't want to find deals. They don't want to negotiate deals. They just want to sit back, do nothing, and earn money on their money.
Yeah, sounds like a lot of people. Hold on one second. Okay. So there's a lot of people that want to make money. So talk about, and he's got I'm going to just prep you for this. You got to stay to the end because he's got a great report on this that breaks it down for you. But how do you do that? How do you get people because you talked about before we started recording about how there are different people that could use it, how wholesalers could use it, how different people. So you know where to start. So you just start where you
Well,
start.
I mean, in other words, first of all, who is this money for? Well, private money is, in the world that I'm talking about, private money is for real estate investors. Now, primarily what I do is residential, single family houses, but it's all the same money. You can use it for single family houses. You can use it for Airbnbs. You can use it for long-term rentals. You can use it for commercial. You can use it for small apartments, duplexes, quadplexes, ever. It's all the same money. I just focus on single family houses. And the private lender, again, as I say, what they love about it is they are able to be passively involved in real estate. But in this world of private money that I'm talking about, you see, when I was borrowing money from the banks made the rules. In this world of private money, we make the rules. The real estate investor, the borrower, we make the rules. And in my new money guide that I just wrote, it spells out the private lending program that I teach new potential private lenders what private money is and how they can earn high rates of return safely and securely. Now, my wife, Carol Joy, and I, we're here in Eastern North Carolina, which is a really small market. I mean, our total market that we invest in is only 40,000 people. But since we started in 2003, we've rehabbed over 450 houses. And that doesn't even include all the terms deals that we've done in the pretty house business. But we do 2 or 3 deals a month. But our average profit using private money is $71,000 per deal, doing 2 or 3 of those a month.
Wow.
And so, Curtis, I just didn't wake up one morning and say, I think I'll go raise me some private money. It didn't work that way. Like
Okay.
you said a few minutes ago, necessity is the mother of invention and creativity and all that kind of good stuff. And so from 2003, Curtis, from 2003 to 2009, here in our little tiny area in Eastern North Carolina, I relied on traditional money to fund my deals.
Yeah.
I relied on the local bank, mortgage companies. And I tell you, Curtis, I remember it just like it was yesterday. I picked up this very phone. I know it may be hard to believe, but we still have landlines here in Eastern North Carolina.
Right. What's that? My kids will be like, what's
One
that?
word, the land line with
Right.
a cord attached to it.
Right. Right.
Anyway, so I picked up the phone. I had 2 houses under contract to purchase. And I called, and this was 2009. I called up my banker that I had been doing business with for 6 years. And I'd had this conversation with my banker many times. I told him where the houses were located, the after repaired value, the funding that I needed for the deals, and the closing date. And I learned right there on the telephone, Curtis, that I had lost my line of credit with no notice.
Wow.
Nobody had told me my line of credit had been pulled. And I had an 800 credit score, never been late on payments for 6 years. Well, I quickly found out, Curtis, I was not the only person in that situation in 2009. It's like the spigot was turned off, not only nationwide, but globally. We had a global financial crisis going on. So I hung up the phone. Now, this was back in the day. I couldn't get my earnest money back. I'd already put earnest money down on these deals. So I hung up the phone and I had a new mantra that came to my mind right there and then, because I was getting ready to see $100,000 flowing out the window going bye, 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 bye. And my new mantra that came to my mind was, it's impossible to fail unless I choose to quit. It's impossible to fail.
That's right. That's right.
And failing and quitting wasn't a choice for me. And so I called up my friend, Jeff, who was a real estate investor at the time in Greensboro, North Carolina. I told him what had happened. He said, well, Jay, welcome to the club. I said, what club? He said, the club of losing your line of credit at the bank. I just lost mine last week and they cut me off. And I said, well, how are we going to fund our deals? He said, private money. I said, what's private money? I'd never heard of private money, never heard of private lending. And so I studied it very quickly. I put my own program together. And then here's what happened. Did you know, Curtis, I've never asked anybody for money. You mentioned it in the introduction. I've never asked anybody. So people ask me, they say, Jay, how do you have 44 private lenders and the tune of about $8.5 million in private money that you just move from project to project and you never asked anybody for money? And it's real simple. I put on my teacher hat and I started teaching people in my warm market, people that I've had some kind of association with at church, at the Rotary Club, at the Chamber of Commerce, my connections, people in my cell phone. I started teaching them what private money is, what private lending is, and I taught them my private lending program. And it only takes about 20 minutes to review the program and how it works and how they can earn high rates of return safely and securely, the interest rate, how they can get their money back in case of an emergency early or whatever. And by the time I get through teaching the program, I just shut up. I don't ask for money. Guess what? Now they're chasing me.
Right.
And now they're chasing you when you're teaching private money, because my lands, did you know that as of last week, the average 12-month certificate of deposit yield at the local bank is paying a whopping 0.33%.
Yes.
0.33%, a third of 1%. Well, my lands, you come along and offer, and you pay 8%, which is what I do. I pay 8%, and I pay that to the private lender. Well, my lands, that's like 24 times more money than they can make at the local bank, right? So that's one of the big reasons private lenders love the program is number one, they make a lot of money. Number two, it's safe and secure because we don't borrow unsecured money. I can legally, I can borrow unsecured money, but I back all the notes with the real estate that we're buying. So all my private lenders get a deed of trust in North Carolina.
Right.
Most states it's a mortgage. So we collateralize the note with the real estate. They're protected. And the third reason they love the program is that there's no volatility in their investment or principal amount. I'm contrasting that to the stock market. You invest in stocks or mutual funds. Well, there's fees, there's commissions. Your money can be worth less or more than it is today, but not in this world of private money. The private lender's investment amount, their principal loan amount remains the same. There's nothing that comes out of it. I pay all the closing costs and they know exactly what the return on that investment is going to be. And I mean, for some of our elderly private lenders, they absolutely love that there's no volatility in the value of the investment.
I can see how there's a lot of, because there's a lot of they don't want to be in the stock market and you can't get any returns on CDs, on safe money where it's liquid. And the whole the system, Wall Street is designed to lower rates to force you into the stock market. So, and that's monetary policy, right? So you have to fight fire. I tell people, don't do what they tell you to do, what they do. So that's what I love about what you're saying. And so wait, let me back up. This is what I'm getting. I didn't know this was the thing. So you're teaching people to teach your system. That's the system.
Yes.
Wow.
There are two
Wow.
things. So
You get ready to get a new student. I'm gonna tell you right now.
absolutely. Absolutely. So yeah, I try to do two things. So as a real estate investor and investing in single family houses, and I got a shopping center too, but anyway, so I've raised a lot of money teaching individuals what private money is in the program and all that kind of stuff. Then I turn around simultaneously and I teach other real estate investors how to become a teacher and teach private money to where now the money is chasing the borrower. So now my students, private lenders are chasing them. I got a big problem right now, Curtis. I got more money sitting on the shelf, unused from private lenders that I'm trying to find a home for.
Wow.
It's a good problem.
That's a good problem.
It's a good problem. I mean, I'm saying, I know you've heard this, Curtis. I know you've heard this. I know you've heard some teachers in real estate say, oh, go get the deal under contract. Get the deal under contract. The money will show up. I'm going, where? Right. Where's the money going to show up? Right. Like rain out of a cloud or something, unless you're a wholesaler and you've got a buyer's list of other real estate investors. But if you're wanting to do a deal, think how much more confident you're going to be, how many more offers you're going to make when you got $500,000 or $1 million burning a hole in your back pocket, ready to be put to use.
That's all. So let me ask you this. So I'm thinking about, because I have a lot of people that would be real estate investors. Okay. And they're just, oh, I want to leave my job. I want to do this and that. They don't save. They are, oh, I got to get my credit. I got to work on my credit. They have all of these barriers. I got to get a down payment. And what I'm hearing is that, and they don't even know how to, so this is the other side of how to do. You know how to find the deals.
Absolutely. Well,
that's part of it.
The two biggest questions new real estate investors are asking is, where do I get the money? Right. Well, and secondly, how do I find the deals? Well, I can tell you where you don't find the deals today. You ain't going to find them in the multiple listing service. There ain't nothing in the multiple listing service. There ain't no inventory. So by and large, all the deals that we do are what we call off market, which means they're not in the multiple listing service. We're buying directly from owners that are either personally in distress or the property's in distress or both kind of thing. So yeah.
But you have a system to kind of lead generate for that, I'm assuming.
Oh yes.
Which is now a system, right? Not just walking around and putting out bandit size. Well, it could be a system too, but it's two parts.
All of my lead generation is on automatically done every day. And I tell people all the time, if you don't have consistent leads coming in every day, every week, you're not in business. You got a hobby.
Yeah.
Now, do you want a hobby or do you want a business?
Right. Right.
But
So you can repeat that again. Right. You got to be a business, right? And which means because it's lead generation, lead conversion, lead fulfillment. Like I don't care what business you're in, that's the business you're in. And a lot of people, I'm a wholesaler. Like, okay, well, what are you doing to get people? Like they just bump into somebody and you're competing against professionals that like you that have systems. And then do you have a buyer's list? And so they're fooling themselves because they don't really understand the business that they're in, which is really the marketing business, right?
Oh, that's really the business you're in.
Yeah. I don't care what business. Like I realized in my business, you've gotten pretty good at my insurance businesses, but I realized I was in the marketing business, right? And that was the business I was in. So once I got clear on that and was studying Jay Abraham and Dan Kennedy and like Russell Brunson, which is Dan Kennedy 2022, basically. And yeah, that's when I turned around. Whereas you don't sell the thing, you got to be a marketer of the thing.
That's right.
And you got to attract. Like Dan Kennedy has this thing in his book, No BS Guide to Sales Success, to be a welcome guest, not an annoying pest, right?
I love that phrase.
Right. And so and here's the thing, you just verify, this is what I stumbled into, is that teaching sales, right? You don't sell by selling, but if you'll educate, so I love that. I got to learn how to do that. I love that because that's the thing. If you'll go out and you go to your natural markets, your natural market, as you said, or I feel like I'm talking too much. I'm gonna stop. You just got me. See, it's got me excited. I told you we might have to do a part two. But the adult education programs, so you could once you get into it, you could raise all the money that you want. I can do that now.
Absolutely. And it's like I got 44 right now. I got more wanting to cut. I got so much chasing me. I refer all those new ones over to my students to help them get going and all that kind of stuff. But yeah, I mean, it's all about attracting. Look. See, it's people ask me, how do I get started in private money as a borrower? How do I get started getting a lot of private money? First of all, the first thing you want to do is own the real estate that exists between your ears before you start getting out there. And what I mean by that is it's all framework. So we're not chasing, we're not begging, we're not selling, we're teaching. And look, there's no rejection. How can you be rejected if you don't ask for nothing? Right?
Right.
There's no rejection. And I'm genuinely concerned. It's all about having a servant's heart and wanting to make a difference in other people's lives, either as the real estate investor when it comes to the houses you buy, or if you're selling on rent to own, maybe on some of that stuff. And with private lenders, here's the deal. The private lenders actually need us more than we need them. And here's why. There's so much private money out there. There's no way we can use it up. I mean, since the current administration took office, regardless of your political administration took office, there's been more money printed in the basement of the White House.
Right.
Than any other year and a half or 2 year period. And so here's the deal. There's so much money on the street. People don't know what to do with it. And it's our obligation to relieve them of that problem.
That's right. Entrepreneurs solve problems. I love that. Right. And so too much money. And so what you got to do is you got to use that money to buy a real thing. Right. A real tangible thing because there's inflation, which printing money is inflation. I won't go there today, but that's the definition of inflation is the expansion of the money supply. But what happens is there's winners and there's losers, right? And so if you own assets and you can use other people's money to buy assets, you're on the right side of the game, or as Kiyosaki would say, the cash flow quadrant, right? You want to be on the right side of the cash flow quadrant, literally the B&I side, as opposed to the employee self-employed side. And so, which the tax code favors you, the Fed is on your side, all that stuff. And so you really need to understand the game of money. Let me ask you, so let's talk about, there's so much stuff. All right. This would be a part two. Being a lender. Let's say because like that whole I'm lazy and just don't want to do anything, that describes me perfectly.
Well, even Dan Kennedy himself admits he's the laziest person on the planet.
Right.
He's just figured out how to do everything systemized and
Right.
automated and all that kind of stuff. I got to tell you this real quick, though.
Okay.
While I'm thinking about it. I got to tell you my favorite reason for private. Well, I got a long list of
Right.
favorite reasons for private money, but one big one is not only do I make the rules, it puts me in charge of my cash flow, puts me in control of my business. But one big thing is that when we use private money and we're purchasing a property, we don't ever take any of our own money to the closing table. And even better than that, I always bring home a big check when I buy a property. So, I mean, which would you rather do? Have to take 20%, 15%, 10%, whatever, to the closing table, or take none of your own money to the closing table when you're purchasing and bring home a big check? People say, how in the world do you do that, Jay? It's simple. I borrow more money than I need to buy the property. And for that to work, I've got to be buying at a discount, right? I'm not buying at retail and bringing home a big check. So I'm buying at a discount and I'm bringing home a big check. I mean, I got a file right here full of copies of checks, and most of them are 30, 40, 50, $60,000 checks when I buy.
Right.
And so I mean, I just love it. I love it.
That's the way to do it. That's completely counterintuitive to how people think real estate works. When should private money be used in real estate deals?
Well, you don't need private money if you're wholesaling, right? So if you are just marketing to find motivated sellers, getting them under contract, and then assigning that contract to another real estate investor who has the money or the private money to take it down, you don't need private money if you're going to wholesale. You don't need private money if you're going to do sandwich lease options. You don't need private money if you're going to buy subject to the existing note, unless there's a lot of payments that are in arrearage. Well, I combine buying subject to the existing note, and I don't know, we may want to define what that means real quick. But anyway, I will buy subject to the existing note a pretty house, right, that doesn't need hardly any rehab, but all those payments are behind, like foreclosures, right?
Right.
So if the payments are behind, I can put a small note in second position of private money and use the private money to bring those payments current. If there's equity in the property, there's got to be some equity in the property to do that. So so let's answer the question. When do you need private money?
Yeah.
Well, you need private money when you need private money when the seller of the property, and the seller could be an individual, it could be a bank for bank-owned properties, REO, it could be a house being sold at auction, short sales. Anytime the seller of the property requires all the cash, that's when you use private money. Now, some people have the misconception that when I buy on terms or buy with seller financing or buy subject to the existing note and buying like that, that I don't need private money. Well, here's my statistic, Curtis, and I'm pretty good. And my acquisitionist is pretty good when it comes to negotiating deals. But after reviewing over thousands of property lead sheets of information from individual sellers, I discovered that only 13% of for sale by owners will sell creatively, meaning seller finance. What do the other 87% of all those FSBOs require? All the cash.
Right.
So I'm going to use private money for ugly houses that need major rehab. I'm going to use private money for pretty houses, as long as there's some equity, when people won't sell to me creatively on terms. So in the real world, most real estate transactions happen when the buyer has got all the cash available.
But doesn't it have to be your cash? That's the key.
No, not your cash.
That's right. That's right.
I seldom use my own cash, and I'll tell you why. If I got 20 projects going on at the same time, I don't want my cash buried in 20 different projects. Right. I want my private lenders' money into projects.
Oh, Jay, listen, I know you got a time constraint, and so I told you to give me the high sign. I was thinking.
Oh, no, I'm good for a little bit.
Okay, so let me give you a scenario of a lot of people I know. So let's say I've got because this is what I'll tell you me. I'm looking at like, so our business does well, but I want to develop passive income outside of my business, right?
Sure.
I like real estate. I don't love it, right? I don't want to manage construction projects. I don't want to. And so I'm thinking about, all right, what's the best way to do this? So I like what you're saying in terms of raising money. Like I could teach what you're talking about, right?
Sure.
And so but I still need to know how to find and put together the deal so I have something to use the money on, but unless I get a partner or something like that. So
That's right.
I'm stuck there.
Sure.
Or
Yes.
just be a private lender. And
Yeah, you can be a private lender and be totally passive. Or as you just said, you can raise private money for deals. You can do what I do. You can teach other real estate investors how to raise a lot of private money, or you can teach individuals how they can be a private lender, right? Because they can use their funds in so many different areas. But as far as the benefit to you, Curtis, the benefit to you is either be I'm a private lender myself. I
Right.
borrow a lot of money. I lend out private money from my retirement account.
Right.
And there's a big one right there, particularly a new investor. You want to get connected with an IRS approved self-directed IRA company.
right.
And here's why. Over 50% of my private lenders are loaning us money from their retirement accounts.
Yeah.
And listen, they can't do that unless they move an existing retirement account or a portion of it over to an IRS approved self-directed IRA company. It's also called a third-party custodian. Well, here's what's really cool. And hardly any of the individuals walking around have ever heard of this. I'm talking about just individual people that could be private lenders. There's a way that people that have retirement funds can earn at least tax deferred income, or depending on the type of retirement account, such as a Roth IRA, they can earn unlimited money per year, tax free.
Yeah.
Tax free.
Yeah.
So I learned about self-directed IRAs on the very front end as well, so that when I was talking to a potential private lender, we could talk about investment capital, or we could talk about using the retirement funds. I got a lot of private lenders that do both.
Yeah.
They lend just liquid capital, their investment capital, and they also lend out of their retirement account.
Yeah. I also have where I've got one of my clients, I showed him this, he was doing it. And then we showed him he put a lot of money in a life insurance, properly structured permanent life insurance policy. And so now you can get to kind of have your cake and eat it too, because he can borrow it at like 4%, loan it out, still have his money earning money at 4%, and then get the spread between the two. And so,
Absolutely. Yeah. I
yeah.
teach that all the time. That's called arbitrage.
Yeah.
Or leveraging an asset to where an individual can it's the same thing works for what you just said with the life insurance policy. It also works for like an equity line of credit. An individual can go get an equity line of credit right now, and you can borrow at 3% or whatever. Bank, I come along and pay 8%. They get to do what the banks do, plug it to spread. But you know what's so cool about those types of strategies? You can't calculate the rate of return. It's infinite. Here's why.
That's right.
You can't calculate a rate of return on money you're earning on money that you didn't loan out of your pocket. You're loaning out the bank's money, and you're making money on that money. How do you calculate that return?
Right. Oh yeah. I mean, we've got to learn the game of money. And because we're being taught buy and hold, dollar cost average, get out of debt. And there's other people that are playing by a completely different set of rules. And you've got to understand those rules, but it takes work. Like I said, the first real estate you have to own is in between your two ears. You've got to learn how to do it. Let me ask you this. So when you do this, what's your preferred exit strategy?
So when I am buying a house, I exit. Here's how I do it. If I buy with private money with cash, then I typically cash out, because I want to leave a bunch of money buried in that for a very long time. But when I buy on terms, like I buy subject to the existing note or seller financing, then I'll typically sell on terms. So buy with cash or private money, cash out.
Cash out mean refinance with a regular conventional 30-year mortgage.
No, I'm just talking about
Sell it. Oh, okay. Okay.
sell it. Now you could refinance it Now you're talking about the
Right. Right.
strategy. But anyway, in either case, I don't want to be owing the private lender for a very long time. Even though in this world of private money, there's no hurry to pay it back. I've sold a lot of homes on rent to own, and I actually require my rent to own buyers in credit repair because I actually want to help them get a mortgage.
Right.
That's another conversation.
Right. I love that. Helping people get on top of the horse, I call it, is what excites me. And that's what excites me about that, making sure, because I know people like when they do rent to own, and if you don't have a back end program, less than 10% of the people actually finish and buy the house. And then the
That's right.
seller just takes it back and does another one.
That's right.
I would want them to get the house, but
Yeah, that's why I help them.
yeah, you gotta help me. I put them in credit repair. Let me show you how to manage your cash flow. Let me know because there's a reason why their credit's bad
Right.
a lot of times, right? And so they have to learn how much, or they're in business and they have bad books, but they're making money, right? And you just got to give them time to kind of, okay, show a little bit more money and on their tax return so they can qualify for the mortgage. But either way, they're paying you and they're fixing it because they own the house. That's what I like about the lease option stuff.
Right.
Oh my good, that's a whole other conversation. So
Yes, it is.
listen,
So we got up a part two.
listen, we are going to do a part 2. Tell them where to get the report and where to find you and follow you or study with you or
Sure,
tell them what you want to
absolutely.
do.
So I just finished writing this new private money guide, and whether you've never borrowed private money or not, this guide, you're going to want to download it. The name of it is 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and help you build incredible wealth. It'll get you on the fast track to getting funding. I mean, you get this guide and I'm telling you, it'll get you on the track to never missing out on a deal because you didn't have the money. You can download it for free at www.jayconner, and I'm with an ER. So that's JAYCONNER.com/money guide, MONEY guide, GUIDE. jayconner.com/money guide. It'll get you on the fast track to private money. And of course, I have other resources as well that I'm glad to help you with. You can just go to jayconner.com, just to the website, and to find all kinds of resources there as well.
Awesome. All right, we're gonna put all that in the show notes, Jay. And I'm looking at like some of the things that you do, and they're all fascinating. So we definitely got to do part 2, like in the near term future. So I know you got to go soon. Anything I should have asked you that you didn't, you want to make sure we put out there?
Man, I think you got a great introduction for us.
Yeah.
I will tell this. If I knew in 2003 what I know today, I for sure would not have started this business on my own. I didn't go to my first real estate investing seminar or training until 2009.
Wow.
So for the first 6 years, I was just reading books. Don't do it that way. Oh my word. The mistakes I've made, the money I have lost because I did not get myself a mentor or a coach, somebody to work with like Mr. Curtis May, right? That can hold your hand in this kind of stuff. So if you're new or you want to be, my lands, work with someone that's already figured out how to walk through the mines and not get blown up.
Yeah, that will accelerate your time frames. And too many people are like stuck in their own head. And so I'm gonna let that be the last word because I think that's key. Like I always tell people, pick a horse and ride it, right? Of what excites you. Is it business? Is it real estate? If it's real estate, is it single families? Is it lease options? Because that's a big conversation. And
Sure.
then put your head down, get a mentor, and go to work.
Absolutely. And you know what? If you're in the business where you're going to be needing cash for private money, which is most of the deals, then here's what I say, and it's a writer downer. The money comes first. And here's what I mean by that. Focus on getting the money lined up for your deals first. And because there's always going to be deals.
Yep.
There's always going to be deals. But get your private money lined up first, ready to go. And it don't take long. I teach people all the time how to get $500,000 ready to go in less than 30 days.
Wow.
Right. And you don't use it until you got a deal.
Right.
So get the money first, lined up, then go negotiate your deals. And I tell you what, it just helps you sleep a lot better at night.
Wow. There you go. And with not being personally guaranteeing all this debt and everything.
And there's no
Yeah.
personal guarantees with
That's right.
private money. No personal guarantees.
Oh my goodness. Yes. So guys, this is an awesome show. So I helped a bunch of y'all just got blessed today with this information because you're stuck, right? I need the money. I got to work on my credit. No, you don't. You do, but that's going be a reason for you not to move forward, right?
Look, your credit score your credit score is important. And
Yeah.
Curtis can tell you for many reasons why. But your credit score's got nothing to do with private money. Private lenders never pull your credit score, and you can be stone cold broke, and they don't ask for verification of income. It's a collateral-based loan.
Right. And so you mess up, they get the property. So they
That's
love
it.
that, right? Oh my goodness. Okay, Jay, thank you so much. Okay. And so y'all can't tell I'm fired up about this interview. So listen, y'all make sure y'all reach out to him, follow him, get the report, do something, right? Move at the speed of action. Don't. So if y'all hear this and I talk to you 3 months from now and you still tell me like, well, I'm waiting. Yeah, I'm trying to get this money. I'm trying to work on my credit. Then you did go back and listen to this again. All right. Because you missed it. All right. So I just saw Jay just saw the lie. I'm just an interviewer, right? Just solved a lot of problems for you guys. So Jay, thanks for bringing on the Practical Wealth Show. This was fantastic. I appreciate you so much.
Thank you. Thank you so much for having me, and I can't wait to come back.
All right. Thank you, sir.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted.